Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Hello, this is Hall Martin with Investor Connect. Today we're here with Yash Thukral and Sam Yaffa of TRITON Funds. Yash and Sam, thank you for joining us.
Thank you for having us, Hall. It's a pleasure to be on today.
Thank you.
Great. Can you guys give us a little bit about your background before investing in early stage and what kind of led you into the role you're in today?
So I'll start. I come from a background of entrepreneurs. My family's friends, everyone's always been an entrepreneur. So I've always kind of lived and seen that startup atmosphere where, you're kind of running the show. You don't really have a 9 to 5. You're always working, and it's pretty much your life. So going from there, that was in my blood that I knew I would want to have my own startup one day and broadcast into that direction. Before coming in, starting TRITON Funds, I was in a couple of investment banks, small mid-market, mid-cap investment banks, and built my connection there, learned the experience in this field, and that's my background.
Yeah, and in terms of me, an entrepreneur is not only just somebody who has a big startup that pitches to venture capitalists. An entrepreneur is someone who just starts a nail salon in their local neighborhood. And my parents, they had started a print shop and they run their print shop and work day to day. And I saw how hard they work. And I knew that people like this are seeking capital out there and that you could fund their ideas. So my own personal background, I've had experience interning at places like UBS and Prudential. And I saw the wealth management side of finance. However, personally, because myself, I feel like an entrepreneur, being that we started our own business, I felt like it was a little too slow for me. So I had to get out of the wealth management side, join the startup side.
So we have a lot of investors out there, and many are first time at investing in startups. What would be your advice for those who are investing in startups?
So advice for those investing in startups, I would say there's two big things from my end. One, everyone overpromises, and that's one thing that you have to believe in them. It's not just a product if it's their early stage. Everyone believes they're going to do good, but you actually have to see the value in who is building what they're building and who is creating what they're creating. And if you see the value, then it could be a good investment for you to jump in. Two, don't put someone down because of their age. Sam and I are both 21. I go to UC San Diego. He goes to Cal State Northridge. We haven't graduated yet, and here we are starting and running our own fund. So age, personally, I definitely think should not be a factor, and more so you should look at the individual as a whole.
And I'd also like to add a disclaimer to what Yash said about people overvaluing their business. It's a good thing and a bad thing. It's a bad thing because, yes, people often promise the world, but it's a good thing because would it really be an entrepreneurship culture if you didn't have that much optimism about your company? So it's one of those things that works hand in hand for both the good and the bad.
Well, certainly you guys have a new fund there, and the VC industry is changing dramatically right now. Can you talk a little bit about the change you see in the VC industry and how you're a part of that?
Right. So I believe that the VC industry is really targeting the millennial generation, and that is why our investors have entrusted us with so much capital to invest, because people are really valuing millennials. And the reason being is that there's a big disconnect from the generation that is older than us, the baby boomers and the millennials, and everybody understands that disconnect. But the real disconnect is between that older generation of baby boomers and the generation below the millennials. And that's a real big disconnect. So these millennial companies and investors trusting kind of the millennial insight to fill the gap and bridge between what the youngest generation of people are going into and what are those demands, that is kind of the biggest thing. So investing in millennial style businesses is definitely where venture capital is headed to.
One thing I want to add on that, there's sometimes a negative connotation to the millennial generation, how they're lazy, they're very dependent on technology. But as society as a whole, technological advancements are pushing us decades into the future than where we thought we were going. We've grown up and adapted to that lifestyle. However, the generation after us, they're being born in that lifestyle. They're coming with the knowledge that can create the next biggest technology that will advance us centuries into the future. And we're the bridge between essentially the capital to the ideas.
That sounds great. So can you tell us more about your fund then? What's the investment thesis behind that, and how did you arrive at that?
Right. So we consider ourselves an ESG fund. So environmentally, socially sustainable investing. And that's how we look at our investments. We look for investments that have a positive impact on the millennial generation. And yes, that does include life science companies, because we want to invest in companies that are going to find cures, whether it be for cancers or different therapies or whatever that might be. Another aspect we look at is technologies that are emerging now, who are the first movers now? And we see a lot of that in AI, artificial intelligence, blockchain, machine learning. And one of our, I guess you could say, flagship investments that we made in the private space is ride sharing. And if Yash, you'd like to touch base on that.
Sure. The investment Sam would be referring to, there's two big ones, actually. I would say one is At Your Gate, airport delivery service, essentially. So you're running late for the airport. They have authorization to deliver food at your gate. So you don't have to worry about the hassles of going anywhere, stopping. You can just pack, get to the airport, and know in full conscious that your food is going to be at the gate waiting for you right before you board. Another one is Lime Bike. If most of you are some of you unaware, it's essentially a dockless scooter and dockless bike sharing program where you pay $1 or so for an hour, you ride it around, and wherever you're done with it, you walk up and let the next person ride onto there. And then I also want to touch base on one big thing about the life sciences. With our investment strategy, we don't just believe in helping our companies, helping our fund, helping our investors, and helping our students at the fund. We believe in helping the community as well. So we're based out in San Diego. That's where our headquarters are. Everyone at the fund is a student, so they're getting the educational knowledge of being in high finance. And we like to invest in life sciences because there's a plethora of life science companies in San Diego. So we believe in a cycle where we put money into those companies in turn grow, those companies provide more jobs for the community. We can exit at a good position. Our investors are happy, our students are happy, our companies are happy, and the local economy is even better.
So what startups actually fit your fund that you would actually invest in based on sector, stage, revenue, etc.? For the startups out there who are thinking about applying, what are you going to be looking for to consider them or not consider them?
Sure. So specifically, we look at B stage and C stage type financing. For instance, Lime Bike was a seed stage financing. We look for companies where they have a revenue already of $500,000, so they need to have a run rate of $500,000. Very rarely we actually do look at the seed stage investing. At Your Gate was our seed stage investment, and why we liked it so much is because they were a first mover in the airport delivery services, and it was at San Diego Airport where our fund is located in San Diego. So that is the reason why we went in a seed stage there. However, the majority of our private investments are going to be in that B stage, C stage, where there are other investors who also have an influence on the company. For example, with Lime, because we're connected to UC San Diego, we could bring a value add to them. So we could say, hey, Lime Bike, you want to put your bikes at UC San Diego? Great, we're going to go ahead and make that connection. However, we also have other co-investors like Google Ventures, and Uber is a co-investor. Uber went in and said, hey, you could put your Lime Bikes on our app and you could actually unlock the bikes from the app. So one thing we want to look at when we do these C stage investments is that there are other co-investors or incubator or accelerator that is going to be a value add, just like we are going to be a value add to the company.
Another disclaimer I want to put on that note is that our portfolio, we're not traditional venture capital for this sense. We do dabble in the public markets as well as the private markets. And a lot of our companies that we look for will be on the public side due to the educational aspect of the fund that we want to give to our students. They're fully transparent. They comply with all the SEC regulations. And it's easy for students to get in, talk to management team, and understand everything from the beginning to end.
So how many investments have you made so far, or how many companies have you funded so far?
Disclosed, we have probably around 11 investments.
Okay.
About 2 in the private space and the rest in the public space.
So in investing in that space, 500K revenue or more, what do you think is the common challenge those portfolio companies are working their way through? If you had to pick one, what do you think it might be?
For our public companies, our investment criteria typically is a little different. That was for the private side. For the public side, we typically target companies with 250 million market cap or less, and that is pretty much because that's what our check sizes cover.
So for the private companies, what's the challenge most of those companies are going through, and at what level maybe you can help them with some of that?
Right. For the private side, it's definitely about capitalization. And a lot of these companies require a lot of money. And we know that if they require a lot of money, that means they're going to need an up round eventually. Well, hopefully they're going to do an up round. So that way, on paper, our IRR increases. So a big problem we see with private companies is they're very capital intensive. Now, for someone who is creating a startup, if you could find a company, if you could create your company that's self-sustainable and find a path to cash flow break even or cash flow positive, that's what we want to see in these companies, that they do have a path that way. We see a lot of startups pitch to us and they try to be like Elon Musk and think that they could do 10 different things at once. But no, you need to focus on one thing, get that completely garnered in, and then you could go ahead and expand.
Another thing with that, I feel like a lot of startups, since they are in such need of capital, it's just the nature of the business when you're trying to make it. They look for money and any money that can come their way. But I would always recommend, and I think the best thing is to get smart money. As Sam mentioned earlier, what we like to do, a value add, find people who will be a value add, find people who genuinely have interest and experience in the industry and can help you succeed. They can point you in the right direction. They're not just the capital needs and they leave.
Well, you see a lot of opportunities coming out there, different sectors, different applications. What do you consider 2 or 3 of the hot opportunities that you guys are looking at that get you excited about the future? Life
sciences, for one. I always get excited in the sense that I know that a new drug, a new development can save a lot of lives and really impact the future. And that's something that really gets me excited. A couple other things are same touch base.
For me, it's artificial intelligence, blockchain, and machine learning. And given that we have so many sources of data, whether it be an iPhone or sensors when you walk into a store and Wi-Fi points and location technologies, data is extremely valuable nowadays. And it's about utilizing that data. Therefore, artificial intelligence and being able to make that data not raw data anymore, but smart data and make it a value to data. That is where we see a lot of value in today's atmosphere. Yeah.
That's great. Well, in the last few minutes we have here, what else should we cover that we haven't?
Well, one thing, California is the 6th biggest economy in the world. It's a great place for startups. It's a great place for people to find investors. Up top, Silicon Valley, they're huge. Everyone knows about them. Something that may not be as common, Silicon Beach. It's a new trend in Santa Monica. And the next big place for startups is San Diego. So we're headquartered and where we're looking for investments. California is a booming place. San Diego's next, and it's a good place to look for capital.
And one last note on my end is that for the entrepreneurs out there that are listening, don't be discouraged if you're eating ramen noodles for a very long time before you first see your first upside, your first cash inflow. And one more thing is that a majority of startups do fail, and those are real statistics. So if you fail in one startup, don't be discouraged. Go start your next startup and keep on trying, because one of them will eventually be successful.
We like to say you either succeed or you learn. There is no fail.
That's great. That's good advice and good wisdom. How best for the audience to get back in touch with you guys?
So please follow us on social media, Facebook, LinkedIn, Instagram, Twitter. Our email is located on every single platform, TRITON Funds at tritonfunds.com. or visit our website at www.tritonfunds.com.
Great. Well, we'll put that on the show notes. Appreciate you guys coming out and sharing your information with us today. Hope to have you back for a follow-up to see how the portfolio is going and the new investments are coming. But with that, we'll go and close it out, and thank you for taking time.
Thank you all.
Thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.